Mark Smith, Senior VP and Portfolio Manager at Wells Fargo Advisors. Mark, do you see like a prolonged depression, recession, and a 40% haircut to stocks from here like Nouriel Roubini does?
I don't see it going that bad because all my clients are talking about where's the value right now in the market? Where are we seeing opportunity? As long as you have investors looking long term like that, I don't think that's going to happen. But I do feel that I remember hearing something 2 years ago. We're in the middle of a pandemic. Don't fight the Fed. Don't fight the Fed. Well, if you're going to say that then, you better say it now. And the Fed is going to continue to raise rates. Month over month, inflation is up. Just a number, right? Last month it went up about 0.1%. And so if that's the case, the Fed has to act. They're going to continue to act. Unlike your previous guest, Crosner, I can't say that next year rates are going to start to go down because the numbers don't dictate that. So if you're saying that, you're really just guessing.
Well, I think Mark, to be fair, I think Professor, I don't want to speak for him. Maybe he could jump back on the phone or something. I don't think he's saying the rates are going to go down. I think he said that's when we start talking about rates going down. It's like talking about the Jets winning the Super Bowl. You can talk about it. It doesn't mean it's ever going to happen.
Agreed. So I think they're just going to be talking about it for a while because from what I understand when I talk to my clients, they're still selling their real estate at all-time highs. At least in the Northeast they are. Rents, I haven't heard one of my clients who's a landlord saying they're going to lower rents because they're a nice guy or young lady. Rents are still going up. They're ticking up. Maybe in some parts of the Midwest that could be different. But in these major urban areas, rents are still at all-time highs, and that's a big driver of inflation. The Fed has to act to address that.
Well, you're making a great point because rents, to your point, most people lock into like a year lease, right? That lease goes up. They're locked into those higher prices for at least a year. Home payments, home sales, that's a big deal. This is sticky inflation, Mark.
And that's what the Fed has to deal with. So I don't know if this soft landing is happening right now. If you're looking at where inflation is right now compared to what was last month, and is it going in the right direction? I think the Fed may have to act aggressively to combat it, to your point.
So what are you advising all those clients to do now? They can, market's down 25%. Roubini says we're going to lose another 4%. Scott Minerd says another 20% down. What are you advising to do besides breathe into a bag, relax, think long term?
Well, listen, most of my clients are long-term investors. None of them are day traders and trying to make a buck from month over month. So that's the good news. The other thing I would say is look historically at what sectors have done well when rates are higher. And one sector that's undervalued and continues to show, I think, a lot of strength is the financials. Since 08, 09, and Dodd-Frank got passed in Washington, these banks have had to be lean and mean and also only take on good quality debt. I think CEO Jamie Dimon said they almost have no bad debt on their balance sheet. That's a pretty powerful statement for a bank to say the size of his. And I think many of these other firms, because of the regulations that happened in 08, 09 to prevent that from happening again to the financials, are really, really poised to, I think, benefit with this rising rate environment because they're going to make more money because of net interest margin, mortgages, credit card debt. They're going to make a lot of money in an environment where the spreads are higher. So I buy the financials, specifically, looking at the XLF, getting a broad swath of the financials in your portfolio, because that's the one sector I think historically has continued to do well in the right environments.
Good stuff. And you might have heard Randall Crosser talked about how banks are going to give you a little less than they're taking in. Maybe that NIM, net interest margin spread, is going to grow. Mark Smith, Wells Fargo Advisors. Appreciate it. We'll see you soon. Thank you.